Oh, welcome back to another episode in my trading vlog, where I'm just talking and just having a good time with it. Gonna turn the desktop audio up a little bit here. Oh, no, that's copyrighted. That's not the right mix. Let me play the right mix. Today was a pretty interesting day in the markets, not gonna lie. I've got the charts pulled up here. This is kind of what I look at a glance. It doesn't really, whoa. Okay. Last time the music was too quiet. Like, I do want to have it be heard in the background. Just gonna trust the levels that I see. And let's start talking about it. There's a lot of stuff here. We've got Playboy, top left, AA, top right, bottom left, SLV, equity of silver. It's kind of how I track the silver price. And then SPY, ETF of the S&P 500 index. Let's just digest some of what we saw here. SPY today looking green. That's nice. We're going to just blow one of these cells up. Let's see here. Maximize sell. Whoa. Look at these beautiful 3 candles. It was at this, it was this was Monday, Tuesday, Wednesday, right? So between these 2 candles, for some reason, the United States, in conjunction with Israel, bombed Iran. And it was scary. And yeah, markets dipped a little bit. Let's hear from the close on Friday to that low we saw yesterday. How many percentages was that? It was only 2.5%. That was the decline we saw. It didn't even spook the markets. And despite the opening of each of these candles for the last, well, these lights for the beginning of the week were lower, they ended green. Today, closing within the range of Monday, it's like nothing ever happened. Like no problem. Just keep calm. It's the stock market. You know, it's an ETF. We're just going sideways. Sideways. This is the sideways. Look at that. It's a pretty tall range, too. It's so frustrating. Like, what are you supposed to do as a trader when the price just removes to make a new trend? That's not a trend at all. And if I turn on the line chart, it gets like, you know what, I forgot. I told myself I was going to add more treble. So we'll see if that sounds a little better. Okay, this is a dumb chart. I don't like it. Let's go look at something else. SLV, I'm thinking we're just in an ABC correction here. Not a lot to talk about. Let's go to Alcoa. Alcoa does weird things. You would never guess today, though, because on the line chart, it doesn't really look like a lot. It really doesn't. I don't know why, but for whatever reason, price is moving sideways with the rest of the market. We're going to turn on a candlestick chart here. There. See, that tells an entirely different story. This is how you read a candlestick. We opened really high. And then sometime throughout the day, found a higher high, but ultimately closed very low. The price fluctuation here is just wild. And the hourly chart, I'm sure this is stupid. Yeah, this is what I'm talking about. This sort of stuff. Not pretty, not fun. So I'm not super interested in looking at this right now until we get a real clear defining trend. What I do want to talk about is, of course, Playboy. Because Playboy, I think, bottomed yesterday. And there's some reasons for that. I believe that. We're going to go ahead and have a look at one of these charts. Look, it's a big ABC correction, forming wave 2 of a larger degree. And what that means is that I'm waiting for a wave 3 to be like explosive and be like huge and be like $4. And so if that's what we're looking for, is it biased to look for evidence of that thing since I already have an idea of what I want to see? The answer is yes. But also, if it's valid because there's rules to these sorts of counts. That's the whole principle behind the Elliott wave counting stuff. So I threw out this motive wave, and I was super excited to call it waves 1, 2, and 3, but I ended up just calling them A, B, and C because that's what made sense. and maybe C ends over here, and A is actually over here, or something like that. It got real choppy through here and really weird. I really wish that we had formed wave 4 through here and then exploded into wave 5, but we didn't. We corrected down. It's okay. Don't panic. Everything is going to be all right as long as we're setting higher highs and higher lows. So far, looking good. There's a lot of support down here at whatever that is, 180. $1.80 is giving us support. And so it's possible that we ended that corrective wave C at this level earlier today at around 9 o'clock PST, and we started forming another corrective wave. And because, let's see, this valley right here didn't pass below this valley here, that means this can be a wave 2 of a 5-wave count, 3, 4, 5, which we already have. We can call that A. And it's so dumb. What we're doing is we're just building into a larger corrective trend at a higher degree, at this wave degree. So let me explain here how this works a little bit. I moved some of these chart drawings on a different time frame, and I have regrets. Let me adjust. All right. So these white numbers are bigger than these blue numbers. And there's 5 waves in a wave 3, so you get 5 of these blue ones into this 1, 3 here, and then we got 4, and then we started another one. And this is where it doesn't make sense because I actually did this on a 15-minute hour chart. As much as I hate to do that, I'm doing it. It just makes more sense, right? Oh, goodness. Did I do this on a 1-minute chart? Oh, I did. Okay. That's going to be okay, though. Nobody panic. So this is where I'm at right now. 1, 2, 3, 4, 5. And this is a weird-ass 5. It's got to be just this little thing here. Whoop. A, B, and C. Forming wave A of corrective wave A. And then we had B. Now we're looking for C. Once we finish that, we'll get probably another set of 3 down, probably. As long as we're in an uptrend, it's going to be okay. I'm not going to panic. But it's exciting that we see wave C here at this wave degree. Once we finish this A, B, and C, we might get a little retracement from there, and then it's off to the races. We're watching a bottom form, I believe. This is a bottom. Listen, if it's not a bottom, let's just be really honest about this. If it's not a bottom, then we must hypothesize, and this is what must be hypothesized. If it doesn't just like keep going up and it passes below 178, the brutal, harsh reality is that, like, dear goodness, 124. Yeah, so at 178, I'm out. I'm totally out at 178. I didn't stop out when I said I would at, like, initially I said I would stop out up here, I think it was. And I didn't. Nope, I'm holding. Just going to wait and just goodness gracious, I hope it goes well. Earnings are coming out soon. But today I was really focusing on the candlestick pattern here that we're seeing on the daily chart, which is really cool. Get rid of this. I don't want to see that. I want to focus on these dojis. Look at this. 2 days in a row, price has closed on the same price upon which it opened. And so we get this funky little pattern. And it's called a tri-star. And this one's particularly named bullish. We'll confirm when we close above the range of one of these candles. I believe that is when we close above 192. And it has a 60% chance of being bullish reversal. And that's analysis by Thomas Bulkowski. You can go to thepatternsight.com and see that. When we do break out through here and confirm a push higher, I anticipate it will be stronger. Knowing how Playboy does this number back here, where it just like it'll run, and then it'll just get slammed down, and it'll do this. Ugh. It's very possible. We're going to do the same thing right through here, where we're just going to grind sideways until we get to earnings. And then we'll see price move. And we'll see price move a lot. And I'm looking forward to that. We'll see if that is what transpires. Oh my goodness. Let's go peek at a meme stock. Let's go back to AMC. AMC was green today. 118. Look at that. 118. Looks like it's correcting. Oh, dear Lord. That is brutal. Look at this thing. Like, where do we even draw the triangles? We're going to turn on a line chart here. We're going to... This is how my channel started, was watching AMC. And, like, I pretty much immediately flipped from bullish to bearish on it. But, like, you know, it's pretty obvious what's going on with this trend. And people didn't like it, but I wasn't wrong. But also, who cares? No one wants to hear about how their stock's gonna tank. But it's what was true, you know. It was what was true, and it's like, oh my goodness, just getting clobbered. Wow, insane. You know, there's a lot of divergence in the RSI here. RSI is making higher lows through here, while price is setting lower lows. So that's a divergence. Possible that we see some correction soon. Look at volume is starting to increase down here. Volume's starting to increase a lot down here. Volume's picking up. Applied volatility is coming up too. What's going on here? Uh-oh. Are the meme stocks about to meme? Is it meme season? Wow. This one big green candle had all this volume, and then all of that progress was totally wiped out. Kind of curious. I wonder what earnings are. $1.18 is pretty cheap. I don't think I want to buy it. I don't know. I haven't looked at the fundamental analysis in a long time. I used to have all this old analysis. Check this out. And what happened is that they did like a reverse stock split. And so the price, you know, it says $718. It was $78, okay? But they reversed stock split, so it messed up all the numbers. And all my chart drawings just stayed at the prices that it used to be at, which is also super annoying. I don't appreciate that at all. I had like all of this big analysis, and yeah, now it doesn't make any sense because of the reverse stock split. This is such a brutal chart. You know what we're gonna do though? We're gonna take a look at this. Go into the weekly time frame. We're gonna pull up max available. Yeah. Wow. So this chart reads from a high of 726 to a low of $1.10. Wow, the lowest low. It's been setting a new low every single week for the last 4 weeks. This week's green though. If you look at the volume, like, this is insane. That's AMC. Let's go look at GameStop. There is an old one. I bet you GameStop's doing okay. Yeah, GameStop's doing okay. It makes more sense, to be honest. And I had a bunch of analysis. Going straight up. We're going to delete some of these lines because it kind of clutters it up a bit. And what I'm interested in, I guess, is all occurring within the last 2 or 3 years. So I can just do this. I can go 4 years, show me the daily time frame, and zoom me out. Get rid of some of these targets. Too many lines. Now, it's important to note this was a corrective wave A I've got labeled here. Also, we're going to make this a line graph now because that makes a lot more sense. All right, auto zoom, line graph. And so I'm looking for a B wave. This is like a very extended B wave. Can I even really call it a B wave at this point? It's gotta be like several different waves. A, B, C, 1, 2, 3, and then it starts just back-to-back threes. It's like price almost just restarted right here in the middle of 2024. big volume spike, big implied volatility spike, and then just sideways grind, just chop. Just absolute chop. There has to be some sort of phenomenon like occurring through here where traders are getting wrecked. Someone's running some algorithm, something. Damn. This is like my favorite track on this freaking playlist. I can't tell if it's a MIDI sax or not. Yeah, I don't know. What is going on? Why is this just like, ugh, that's so annoying. Those are the meme stocks. Who cares about the meme stocks? This is the only stock I care about right here. This one. Hold on, let me get the right chart drawings up. Oh God. Oh yeah. That's not the work of a crazy person. Anyway, just wanted to blog a little bit. Still feeling good. Feeling like yesterday was the bottom overall. Just sitting and waiting really till March 12th. At any rate, enjoy. Happy trading.